Hello, commerce students. Today we will do accounts of banking companies. So, so to begin with, we must know that what is a bank. So, bank is a financial institution licensed to receive deposits and make loans. So, according to Section 5 of Banking Regulation Act, it defines that banking is accepting for the purpose of lending on investment of deposit of money from the public. Therefore, according to public, their deposits in bank are assets. Okay, but however it is a vice versa in the point of bank. So from the public, repayable on demand or otherwise, and withdrawable by check, draft order or otherwise. So public can withdraw their cash to check or if draft order or otherwise any other means. So there are several different kinds of banks including retail banks, commercial, corporate banks and investment banks. In most countries, banks are regulated by the national government or central government bank. So there are, however, anyhow, there are also some private banks. So let's move further. Now, basically, what are the features of banking company? So, bank may be an individual firm or company. It is a profit and sales oriented institution, basically. So, the main motive of any bank is that the borrowing, raising, or taking of more money. So, bank basically care up the deposits of money and we borrow the money from reserve bank and further gives to the institutions any type of mother factories to produce goods any customer want or any basically a certain general public want as a loan in the various point of view. So further, the lending or advancing of money either up or without security, bank may provide any general public loan by giving some mortgage security or without any security. The next is the granting and issuing of letters of credit, travelers checks and circular notes. Further, the buying and selling of foreign exchange including foreign bank notes. So any type of foreign exchange can be done as per the mediator of the bank. So there are certain type of transaction that done in the export or import transaction done in the point of view public or general private institutions or government. Okay, so contracting of public and private loans, negotiating and issuing the same. So therefore there are myriad types of bank that take loans from other bank also and from reserve bank, and they further issue the grant loan to other bank also. So in this point of view, in this way we can say the bank can have bank can earn a interest paid and interest earned. Okay, so that we will learn these different schedules that are written in a loop manner. Okay, undertaking and executing trust. So while we deposit our money in a bank, so we must have a trust in that bank. If we don't have a trust, then how can a bank grow? Okay, so let's start our practical. So before doing the practical, we must know that the format of this balance sheet. First of all, we will do the balance sheet. Okay, so balance sheet of ABC Bank 31st March 2018 has been taken as an example for this format. Uh, as you can see that balance sheets schedules varies from 1st to 12th. Okay, so schedule number 1 start from the capital that has come from the P&L account of the accounts of banking company. Okay, so schedule number 1 include capital, schedule 2 reserve, schedule 3 deposit, schedule 4 borrowing and schedule 5 other liabilities. So total will be recorded in the total amount side. Okay, so for the total, after the totaling, cash in hand and with RBI, balance with other bank, and money at call and short notice. So as you can see that these are other schedules that we will further study deeply. Okay, so you can see that fixed assets are schedule 10 and other asset schedule number 11, and contingent liabilities, you must know that what are contingent liabilities. Okay, that further each definition notes are provided in a link in description. So basically you can visit in that link on that links. Okay, so let's move further about the schedule number 1. So this is your working note of schedule number one, asset capital. So it includes equity share capital, preference share capital, subtract it from call in arrears, add call in advance, and add share any type of cancellation of shares or share forfeits. Okay, so if you have given the dividend of any rate and at any rate of interest, okay, that will be go to P&L account, final accounts or P&L account of the banking company. Okay, and further that dividend will be have a certain adjustment that we will do while doing the our questions. Okay, practical question. Okay, so let move further towards the working note number two. So this is our working note number two, that is schedule number two, reserve and surplus. So before starting it, we must know that what is a reserve and surplus. So basically, there are many type of different type of reserve and surplus. That is a general reserve, capital reserve, any type of statutory reserve, workman compensation fund, sinking fund, surplus, P&L of acquisition account, building fund, depreciation fund, tax fund, capital resumption fund, reserve. So So reserve and surplus means profit or funds kept aside in a separate account for some purpose that may help in the future for any type of institution. Either it is a private or public or any type of banking institution. It plays a prominent role in every type of accountings. Okay. While moving further, there is a schedule number three, that is for deposits. It particulars includes that it includes fixed deposit, saving deposits, current deposit account deposits, a recurring deposit, LC account, that is a letter of credit, other deposits except income tax deposit. Okay, that income tax deposit we will do while further doing the work practical problems. Okay, so any type of fixed deposit and through the general public. Okay, the deposits are done by the general public and also the bank through. Okay, so for before doing that in a describing, okay, depicting that, we will move further towards a schedule number four, that is borrowing. The bank may borrow from RBI, from other bank, or if borrowing through India, any type of institutions or any type of companies, okay, that are strongly very much rich, okay, or it may borrow from outside the India. Okay. While moving further to schedule number five, that is for other liabilities that include bills payable, outside expenses, unpaid dividend, incomes received in advance, reserve or unexpired discount or inter-office adjustment. Schedule number six, it includes a cash in hand with bank balance with RBI, that if any type of transactions are done between the RBI and with the bank. Okay, any type of liabilities that we consider that short-term liabilities, that will be included for the other liabilities. Okay, the schedule number five. Moreover, balance with other banks and money at call and short notice at schedule number seven depicted that in the it particulars, it includes that balance with other bank, money at call and short notice which is borrowed from the RBI in very short notice call, that is short term loan given by bank to its esteemed customers with that are very much reputative customers that repay its loan amount without any delay or without any extra charge imposed by the bank on that customer. Okay, that are known as esteemed customers. So further, schedule number eight of investments, that actually investments, we all know that investment is an asset or item acquired with the goal of generating income or appreciation. Okay, in an economic sense. Okay, so in government securities, bonds, mutual funds, equity share of other companies open, that is, they also invest in gold, etc. So that will also included in the balance sheet of the banking companies. Further, at schedule number nine, so the advances. It means that advances. That means that the loans or any type of working capital loans, credit, CC, and bill discount are given to its customers. That will be recorded as an asset in the balance sheet of the banking companies. Okay. fixed asset schedule number 10. So accounting of banking companies includes their own, they have their own fixed assets that are furniture, fixed equipments, table and chair, plant and machinery, motor vehicles, computer. They are all fixed asset of the banking company. Even their software are also considered as fixed asset in schedule number 10. Schedule number 11. It includes prepaid expenses, silver, non-paying asset, interchange adjustment, include income that are not paid. Okay, so that are not received by the banking institutions. Okay, stamps in bank. These are all other assets of the banking company that will be included in the schedule number 11 of the bank balance sheet of the banking company. Okay, so moving toward our last schedule, that is of the balance sheet of the schedule number 12. So what is contingent liabilities? Firstly, we must know that. So these are liabilities that may be occurred by an entity depending on the outcome of an uncertain future event, such as the outcome of a pending lawsuit. Okay, forward for exchange transaction. Okay, forward for exchange transaction means that any type of transaction or charge may be made by the bank or any liability that will be incurred in any type of foreign exchange transactions. Okay, further, there are many types of liabilities that may occur in the future. There is a future contracts, acceptance, endorsement, or any guarantee. Disputed liabilities that may occur in the court cases of the liability, banking institutions, income tax under repeal, income tax deposits, claim not acknowledged as debt. Okay, that may be recovered in the future. Okay, so in this part one of the accounting of the banking companies, we have done the balance sheet firstly. In the part two, we will study about the P&L account of the banking companies. Okay, thank you for watching.